All right, so from the splinter to the Atlanta Braves, my next guest, he likes small cap names, sees a lot of sports investing opportunities. So I want to bring in Boyar Value Group President Jonathan Boyar. So Jonathan, welcome to the show. You like small caps, but you do urge, you urge investors, you have to be very selective. What's your criteria?
First, thank you for having me. Our criteria is we look at companies the way an acquirer would. We essentially take a private equity approach to public markets, and if it's selling at a significant discount to public market, to what an acquirer would, we buy it. And Atlanta Braves is the epitome of a trophy asset, and it's one of the few ways that an individual investor, not a billionaire, can actually buy a sports team.
All right, now most viewers will look at the chart of the Braves, Atlanta Braves, and the stock has come down a lot here recently. I don't know if they missed the earnings report or whatever. You see opportunity in this weakness.
There's tremendous opportunity. It's about $40 a share now. We think it's worth about $60, utilizing conservative assumptions. And there's a tax law change that's coming in 2027 that makes it probable that he will do it.
So right now the chart, no joy in Mudville, but maybe soon. Get in now. Madison Square Garden, of course, and I probably should have used a longer chart because this stock was a juggernaut for a while, still doing extraordinarily well. Why does it go higher from here?
Right now, the enterprise value of Madison Square Garden Sports, which owns both the Knicks and the Rangers, is $5.5 billion. If you just use the Lakers as a comp, that went for 10. The Rangers are probably worth 4 or so. So for $5.5 billion, you're buying $14 billion of assets. To us, it's a no-brainer.
They used to own the thing in Vegas, the Sphere, right? They spun that off. Do you like that at all? Do you look at that?
The Sphere is very interesting. I wish they never had done it, but it's turning out to be a big success.
Yeah. I haven't been there yet. I miss you too by one day. All right, Uber. I'm hearing more and more folks coming on the show. They like Uber. Obviously, it's starting to really get some. This is a 3-year chart. It's looking pretty good here. How has the value proposition changed?
It hasn't. It's a terrific company. We love stocks that are both a noun and a verb, and Uber definitely fits the bill.
You know what it is, though? I just kept hearing that they wouldn't make money until they went autonomous. Like, they have to pay out so much money to the drivers that it was tough for them to grow the bottom line. But that's not true.
It's not true. They are gushing cash, and they'll continue to do it. And they're going to be a beneficiary of autonomous vehicles, not a victim.
Right. That's what I mean. Once they go autonomous, golly.
You don't have to pay your workers. Pretty good.
Yeah. All right. I got another one in Mudville, but you say this is it, right? So I'm not really familiar with is this UniFirst?
Yes, it's the third largest garment rental company in the United States. They basically rent uniforms to people. It's about $170 a share.
Would this be like Cintas kind of?
Exactly.
Okay.
$170 a share. Earlier this year, Cintas offered to buy them for $270.
This is that spike right there.
Absolutely. It's a family-controlled business, so you have to be careful with them. But there's no one in the family who runs it in the day-to-day operations, and we think sooner or later they sell out to Cintas. Meanwhile, you're buying a company that's a good business, not a great business, that has a cash-rich balance sheet. It's a great place to hide in an expensive market.
Are they paying a dividend?
No, a very small one, and they could raise it significantly.
All right. Hey, great stuff. Really thoughtful stuff. It's a different approach, and it's really, it's good to get away from just the usual suspects. Thank you very much.
Thanks for having me.
Appreciate it.